The Dow coming off its biggest percentage decline since late June with Wednesday's 113-point drop. What's in store Thursday? Brendan Conway of Barron's is here. He's got a preview. Brendan, good morning.
Rolf, how are you?
So let's first clear out some economic data we got just now. Tell us first of all, jobless claims, not very good.
Well, yeah, you know, that actually came in at 320,000 claims, which is the lowest figure since, I think, late 2007. So I think this report
actually, so, okay,
is, yeah, this would actually be a good sign in a normal market, but it's funny you mentioned not good because this is not a normal market. People are viewing this in light of how it influences the Fed and what the Fed is going to do with their bond buying programs. I think if anything, this signals to the Fed things are improving. That might mean dialing back, which in this bizarro world market could be taken as a bad signal. Definitely
good news is bad news.
Good news is bad news, and the futures definitely didn't perk up on that, at least last that I saw. So that's interesting.
Meanwhile, similarly, you get CPI data today, inflation data, and that also looks very tame.
Yeah, you know, that is sort of right in line with what economists think. So certainly that's not going to be pushing the Fed in one direction or another.
I should say we got 0.2%. For July's CPI higher, both 0.2% for the overall figure and 0.2% for core CPI, excluding food and energy. So not much inflation.
Right.
Okay. Tell us, how is the market going to react to that today, do you think, that as well?
Well, you know, Rolf, I think that the things setting the tone today are kind of these kind of grim forward-looking reports from some bellwether names. If you want to talk about that a little bit.
Let's talk about some stocks. Yeah, 3 stocks we're looking at. So first off was Cisco.
Yeah, Cisco is interesting because they had a decent report, but their forward guidance was bad, and they laid off, or they have plans to lay off 5% of their global workforce. Remember the last several years, anytime the market would be pretty grim about this, but anytime a major company said we're laying off 5 or 10% of our workforce, the stock would go up because everyone viewed it as a sign of cost consciousness. That's not how they're viewing Cisco. They're viewing it as a sign of weakness. Mm-hmm. This is a period where people want these big companies to kind of go for the jugular and and build and expand. And Cisco's very cautious, so that stock is down 8% in the pre-market.
Speaking of disappointments, Wal-Mart.
You know, that's another case where it was not a bad quarter. Sales were not as good as they wanted. It's, again, this forward guidance that Walmart is very cautious about what happens from here. So, again, that's another stock that, normally doesn't zip around much. That's down more than 2% in the pre-market.
Let's move over to a non-stock. Gold.
Gold.
We got a lot of 13Fs yesterday that were pretty interesting. And by that, I should say for people, this hedge funders told the market this is what my holdings were as of the end of June.
Yeah, no, that's right. And, this is interesting because after, 12 straight years of price rises for gold, it's been a terrible year. What's changed is that kind of big name investors have been selling it off. And sure enough, in the second quarter, you see John Paulson, who is the biggest holder of the gold ETF anywhere. He had the biggest single slug of it. He cut his position by more than half, according to that
He wasn't
filing.
the only one. We also have, who else cut there? Dan Loeb and George Soros both reduced their gold holdings?
Yeah, and, Soros doesn't matter because he's a big holder. It's more that he's kind of one of these, people who touches everything and it literally turns to gold. But he had a small gold position, got rid of it. He was also in a gold miner ETF, got rid of it. What you see in the price of gold this morning, though, is interesting because gold often tends to rise when stocks fall and people get nervous. Today, it's about flat. So what I read into that is at least a little bit of relief that kind of
down a little bit, yeah.
Yeah, that kind of maybe this big hedge fund selling.
But relief, I mean, again, this is second quarter data, and we're a month and a half past that. So if they've sold a lot of their holdings already, then that's theoretically an overhang that's not there.
Exactly. So that might be, good for the gold bugs.
Okay, we got a bonus stock for everyone today. Renren.
Renren is, some people call it the Facebook of China. Mm-hmm. I just thought it was interesting because lately everyone seems to have rediscovered the social media area. Facebook stock is going up and up and up. Renren, that share's getting hammered in the pre-market, 13%. The CEO cited a slowdown in sort of the games that are available on the platform. It just goes to show you that it's a young industry, and if it goes up really fast, you can probably expect it to come down fast sometimes too.
Okay, Brendan Conway from Barron's, thanks so much.
Thanks, Rolf.